The alternative investment market would continue to grow at a healthy pace, reaching US 14 trillion by 2023 from US $10 trillion at the end of 2019, according to the alternative asset specialist Prukin, mostly due to alternatives' track record and ability to deliver superior risk-adjusted returns to investors. With the long-term economic impact of the pandemic still yet to be seen, many are turning to alternatives as a way of strengthening and diversifying their portfolio. As a result, investments in areas that may have previously been difficult to access due to being rather illiquid or considered too niche are becoming increasingly viable for investors seeking to expand their portfolios. Singapore has continued to be a strong asset management hub of Asia Pacific. Total assets managed in Singapore grew 15.3% to hit US $3 trillion in 2019, driven by net inflows from investors, especially when concerns over Hong Kong was raised up since second half of 2019. Over the last 5 years, the Singapore's assets under management expanded at 11% compound annual growth rate, according to the annual Singapore Asset Management Survey released by the Monetary Authority of Singapore. By October 2020, the number of single-family offices in Singapore has grown to about 200, and total assets under management around US $20 billion, with each SFO typically manages assets in excess of US $100 million. Ray Dalio, founder of Bridgewater Associates, Dyson from UK, and founder of Haidilao, are among the most recent ones who set up SFO in Singapore. Against this backdrop, this alternatives sector in Singapore saw continued growth of 12% in 2019 to Singapore dollars 530 billion. More recently, the increased availability of alternative investments is offering up a wider range of options and more sustainable long-term returns. For some investors, this also comes with the benefit of investing in areas in which they hold a personal interest, something like a hobby-related collections cum portfolio. For many, the luxury asset has been one such alternative, particularly as fine art, luxury watches, and sports cars have historically been known to retain or appreciate in value. As an established entity in the alternative asset management sector, we have seen probably one of the best growth in 2020 ever since 2013. And people in the COVID-19 situations intend to stay with themselves rather than mingle around outside, which led to tremendous growth in the consumption in such alternative assets as fine arts, race cars, and luxury watches. More growth in the alternative asset class we could expect into the future. Thank you.